Everyone hates a negative Nelly. Everyone hates the party pooper, the bearer of bad news. My worst selling book of all time was my book on recessions, even though the title was How to Get Rich in a Recession. So I'm sorry if you don't want to hear what I'm going to tell you, but I'm really suggesting you stay to the end, which is way happier, just like my book. It may greatly affect decisions that you make in the short and long term on market moves. This is Randy Kirk. If this kind of content is at all helpful to you, or maybe you want to wait on this one until the end and tell me whether it's helpful by hitting the like button. Subscribe and notify is always smart, as is joining Patreon. We're still sitting at 89 midday today with only 4 days to go. Let's see, Friday, Saturday, Sunday, Monday. Yeah, four and a half days to go to get to 100. So if you'd like to support the channel, but also get unique and special content that I'm putting up there that is not on YouTube, or at least not for a while, all 20 of my big catalysts, my Uber, no, I didn't call them Uber, I called them Giga Catalysts. That's right. Okay, those are all up there for you to see. So, okay, let's get into this. Here's Market Watch is reporting this from Bank of America this morning. I'm going to read this. Resurgent inflationary pressures should do it, and higher oil prices may be the catalyst. What are they talking about? Oh, resurgent inflationary pressures could kill the future opportunity for rates to come down and might cause rates to go up in the future. Who started talking about that 2 weeks ago? Oh, yeah. All right. The cost of Brent crude, and now, I always talk about Texas, which is about $3 less, usually $4 less. It has climbed to a 3-month high above $83 a barrel, where Texas is sitting around 79 this morning. And it looks set to rally to the top of its range, says the global commodity research team at Bank of America, led by Francisco Blanch. Brent and Texas have been stuck in a rough trading band all of this year, which is what I just said this morning. Not for the first time. I've been talking about this for months. Rising interest rates globally have crimped aggregate demand and curbed oil consumption, says Blanch. So in other words, and the narrative has encouraged speculators to maintain either neutral or short positions. Let's go on here just a little bit. In addition, China's emergence from the COVID lockdown has been weaker than hoped, not to mention Europe's, while Russia has been adding more oil to the market than expected because they've been getting around the efforts by the U.S. and others to keep them out of the market. All right, so you've got weakness coming out of, we've had weakness in China, we've had weakness in Europe, even the U.S. market has been considered to be weak, so that has reduced demand. The supply was strong in the first half of the year. The oil supplies in the U.S. were creeping up, they were getting too high, and Texas crude dropped down to around 66, 67, Brent was around 70, and that's the low point of the trading range that it had been. And it was like that until about 4 weeks ago, when Russia, OPEC, and especially Saudi Arabia said, we're going to cut back on the supply because we want to get the price back up. Well, that's all worked now. So this is not yet so much demand driven. You're not seeing tremendous new demand out of China or even the United States, certainly not Europe. What you're seeing is supply drying up. And so he goes on to say, he reiterates his $90 a barrel Brent price target, which would put Texas at about 86, 87 by early 2024. He says, quote, the stars are finally aligning for a run in crude oil prices over the coming quarters. From a fundamental perspective, our supply and demand balance projections continue to suggest that oil markets will tighten very substantially over the coming 18 months. So we expect global oil stocks to decline substantially. Stocks meaning not the stocks, not mobile oil stock, but the available inventories to decline substantially over this period as a result. Driving the imbalance will be further output curbs by OPEC. I don't necessarily agree. And lower exports by Russia as Moscow balks at the oil price caps imposed by the West. I don't agree. I don't think OPEC and Russia will continue to reduce. Russia is now getting serious about reducing exports in the oil market to rein in the Brent-Urals differentials, says Blanch. Zip zero, I don't think so. What's going to happen is, and this is where our saving grace might be with regard to the near and even medium term, is that while OPEC is not as dependent upon oil as they used to be, and I'll talk about that in a minute, Russia needs the cash. They need cash, and they need a way to, they're spending all kinds of money on the Ukraine problem, and their economy is in shambles. So no, I think they want to get the price up, and then they want to take advantage of it. OPEC and Saudis, not as much. We'll talk about in a minute. Then there's the U.S., where the release of barrels from the Strategic Petroleum Reserve will need to be reserved. Hello, that's a hard sentence. The reserves they've been taking oil out of the reserves. Okay, they're going to need to start putting oil back in. With U.S. oil production becoming less elastic, America has flexed its government muscle to cap global energy prices. Yet the SPR, the Strategic Reserve, is now below 350 million barrels and needs to be refilled by 500 to 600 million barrels. Once again, the Biden administration is not going to do this. This current administration is not going to start refilling the Strategic Reserve with super expensive oil. Not going to happen. I just disagree with this part. The fall of commodity costs, they go on to say, the fall of commodity costs in recent months has been a drag on year-on-year headline inflation measures. Yes, the drop in oil has been really helping inflation. Yet a resurgence in energy and food prices in the months ahead, triggered by OPEC and Russia's action, could murk the macro outlook and lead to further unexpected rate hikes. What I said this morning, gasoline up this week, the Trueflation numbers up this week, starting the end of last week, started talking about the fact that this is the one fly in the ointment. A week later, the first person to talk about this Bank of America. Bank of America's team seems to be pretty strong. I'm seeing them commonly be second after I say it. I'm sorry, I had to do that. So my gut has been telling me that there's one leak in the dam of our downward inflationary move, and that is oil. Let's get a little more fundamental with regard to oil. Oil, no matter what anybody hopes or wants to happen, it's not going away anytime soon. We still have tons of coal being produced. So until coal is gone, you're not going to see that much of a dip in oil worldwide requirements. The OPEC nations, while not as dependent on oil as they used to be, they still need it. Okay, they still need that income, but they're starting to change their portfolios and get more diversified in other things, even including clean energy. But they do still need that oil income. Once again, I don't see them driving the price to 90 on the Brent crude. I don't see them driving it above 90. What I see is they're going to get it. They're getting it up high, and then they'll start. Either they'll be neutral or they'll actually start pumping oil again where they can make all the money. Same thing for Russia. And no, the U.S. will not start putting oil back in the reserves unless it gets back down to 67 or something like that. So the current administration seems to have gotten the memo about not being dependent on China for rare earth metals and lithium batteries and BEVs, but they failed to get a much clearer historic message to not be dependent on anybody for the top energy sources, which are oil and natural gas. So drill, baby, drill became use the strategic oil reserve and let other countries drill. This policy is as deadly to the economy as flooding it with the unnecessary cash during and after COVID. This is just crazy. We need to drill for oil. Let the market decide. We cannot replace oil right now. We can only dramatically increase the amount of energy that's coming from solar, wind, and batteries in order to pick up the slack of what the country's going to need in additional energy. Natural gas is helpful. Solar, wind, and battery is helpful, but they're not going to significantly solve the problem until 2027 or 2028. And then after that, oil will go into a significant decline around that time. Natural gas won't even follow until the 30s because it's so much cleaner and cheaper. So Elon just spoke yesterday, I think it was yesterday, he laid out the massive need for electric power generation in this same time period, 2027 to 2030. Because all these electric cars are going to be coming onto the grid. And what's really misunderstood is the data centers. Massive amounts of data is now being computed. The data centers are growing like crazy and will grow even larger now because of large language models and deep learning. Those are going to use huge amounts of energy. I don't know if you know it, but there are data centers that are located directly next to dams so that they can get that resource from the dams using, in some cases, one data center using more energy than pretty good sized cities. So oil is going to continue to be a factor regardless of all these other approaches. Now, the utilities are beginning to realize that solar, wind, and battery is now cheaper, faster, and easier to get permitted. And now that Tesla, CATL, and others are ramping up batteries, the new gold rush is the golden rays of the sun. Tesla, of course, is better poised for this situation than anyone. Just one more reason why almost all of my risk investment is in Tesla. This is not investment advice. Do your own homework. Tesla will be ramping up batteries at an amazing pace. I'm talking about the big batteries, utility-sized batteries, the mega packs. Also the power walls, of course, but the mega packs, big, big, big. Wait for it. Announcement after announcement will be forthcoming. You can just watch it. I'm thinking it'll be 2, 3 at a time where they will be talking about putting up Lathrop-sized facilities. Each Lathrop-sized facility is capable of producing $20 billion a year worth of product. Do you know how many $100 billion companies there are in the world? Not that many. Tesla is just now becoming a $100 billion company. And yet every one of those Lathrop-sized facilities generates $20 billion in revenue at 25, 30% margins. If you put 5 of those up, you've got a $100 billion company, just 5. And we've got another one being built already. And I'm sure you'll hear about a couple of more before the end of the year. You get to 5 and you've already got one Tesla. So you're looking for an investment that's like Tesla that will grow like crazy. Oh, Tesla. All right. So all of the major YouTubers, by the way, you know that I started talking about this last October, November, when the Elon Musk mission came out. You know that I was first. You know that our group, the writers that put together the Elon Musk mission, we were so far ahead on so many things. But one of the main ones was Lathrop and the entire mega pack thing and how it was going to be driving and creating far bigger numbers than even the auto division eventually. But now almost all, I would say 100% of the major YouTubers that follow Tesla get it. All of the analysts on Twitter get it. And even some Wall Street types are starting to understand what is going on. Tesla is also setting up actual utilities in the United States and elsewhere. And then I don't know if you know it, but balancing the grid and localizing the grid will be critical to getting the needed electricity in time. Now, what do we mean by that? Well, first of all, localizing the grid. This is something Elon has talked about for a decade. When you want to localize the grid, that means, okay, you want lots and lots of solar on the roof. That would be the roof of your home. That would be the roof of businesses. That would be the roof of factories. That would be the roof of government installations. That would be roofs everywhere. It would also mean parking lots of major shopping centers. It would also mean going over the chargers in the charging locations with some kind of canopies or other kinds of systems, and even maybe even in fields that are close by, adding solar and more solar to those local situations, and also putting in batteries in all of the places I'm talking about. So solar on your roof and batteries in your garage, solar on businesses and maybe power walls in those as well, or maybe megapacks. Solar on the roofs of factories like Tesla is doing right now in Austin. And then how many, I forget, 68 or something megapacks going into the yard next door in order to help regionalize that power. The same thing will be true for these data centers, but also military installations, government installations. Everywhere you need energy, you're going to need localized supply of energy. You're also going to do what I call regionalization, which means you put in local solar or regional solar and regional battery packs, so that now you don't have to have it travel so far over the infrastructure, over the power lines. The power lines need to be, we need to use those less and use regionalization more. Then you have virtual power plants. Virtual power plants are where you have a solar, you have a power wall, maybe you have solar on the roof, but at least you have a power wall in your garage. And when there's a need to balance the regional utility output, you get to balance it using personal individual homes. The utilities can buy it cheaper than they would otherwise when there's an imbalance, and the consumer makes a little bit of money. You will also have stabilization. The number one reason right now that utilities are buying these big mega packs is because they're trying to stabilize their major grids, the big time, okay? Because a lot of times you have power coming into a region that can't be used, and it just evaporates. Power has to be used immediately unless it's stored. So by putting in these huge batteries, they can suck up a lot of that overage, and then it's there when there is an emergency, when there is a big time use. It is saving Australia and other communities millions and millions and millions of dollars by putting in these batteries in order to stabilize the grid. There is more to talk about on this, but what I wanted to do is end on a positive note. Tesla is at the forefront of what's taking place here. It is going to make big time money off of these energy storage solutions, off of the grid stabilizing solutions, off of their own virtual power plants and other utility installations that they're doing, like in England and in Texas right now. They'll be doing way more of those. So Tesla is just in a super strong opportunity and place where they can make a ton of money. This is something that should help the stock, of course, start moving towards 400 next year, early next year, end of January, and to 700 by the end of next year, even without, the regular ones, the Optimus robot and the robotaxi. Those things will cause it to go way beyond. If those things are announced, it goes way beyond my stats or my suggestions of 400 in the end of January and 700 by the end of the year. We're talking about well into the thousands if either one or both of those are announced. The minute they're announced, within weeks of the announcements, you'll see those going up. All right, one more time, I'm going to recommend to you, I'm going to put a quick card up here to recommend that you go back and take a look at those 10 catalysts, what I'm calling the Giga Catalysts, because they're bigger than mega catalysts and they're way bigger than normal catalysts. No other company. We just talked about how Tesla is putting together what will be a hundreds of billion-dollar company within the company. It won't stop at 5 factories for these megapacks. It'll be 10, it'll be 20. So we're talking about hundreds of billions of dollars getting to the point where just the megapack part of Tesla, and counting the solar walls to the power walls, it will be bigger than Apple in profits and potentially maybe even passing Walmart in terms of revenues. Just that division. Let that sink in. Anyway, be sure to hit like now. Did you like this? Hit like, hit notify. Join Patreon. Isn't this worth $5 a month? Isn't this information worth $5 a month? Come on, guys. I'm working at this 40 hours a week. That's my day job. And then I have 25 additional hours that I spend shipping Amazon and working on my Amazon, and also my continued existence as a marketing consultant to about 5 or 6 different companies where I help them with their marketing. So help out, get the channel going. Patreon, it's you down below, you can find the link. Go on there, 7 days free. You can take a look at the content I'm putting up there, decide if it's worth $5 a month or not. Okay, that's all I've got for you right now. It's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.